All right, the majority of American savers are invested in the stock market through their 401ks, saving plans, or investment accounts. Local financial professional James Gallagher of Waterstone Financial is here to explain some of the basics of the stock market and give us some very important tips I'm learning right now. Good morning, James.
Good morning.
Let's talk about what is the basic idea of a stock?
Well, the basic idea is that you actually own part of the company. And if you take a look at this is an American Pneumatic Service from 1935 stock. You used to get issued a certificate, and it says right on there, you own part of this company. And so when you buy, make sure you understand what the company is. You're owning part of it.
Now, I want to, since you have it up there on the screen, let's put that on the screen right there. People still have these things, right?
Yeah, that's one of my first big tips, is that if your grandfather, your father has a great big drawer of these, when he passes away, it is extremely difficult to get these transferred into somebody's name. It's like found money, and nobody knows what it is, and it's difficult to get it moved around. We've had a lot of estate issues with this, so get them deposited into a brokerage account. That's my first big tip.
All right, while the person who has it is still
alive. Yeah.
Okay, good. Very good tip there. So next question is, how do you know what to buy?
So the stocks are basically categorized into a couple different groupings here. The first one is that we have up at the top here growth stocks, and at the bottom we have value stocks. What that basically means is, I'll give you an example. On the large, mid, and small is the size of the company. A typical large growth stock, let's think Apple, let's think Netflix, let's think companies like that. The bottom, a great big large cap value might be an AT&T. AT&T's been around 100 years. They pay a dividend. That means when you own the stock, every month or quarter you get money because they're going to share the profits. Okay. Not so up here. Amazon doesn't share their profits. What they do is just you hope they grow a lot and get money that way.
Okay, so how do we know which of these is going to make money?
So that's a great point. So the ones up top, growth, they're typically more risky. They typically are younger companies, ones that still aren't paying dividends, and they tend to go up and down in value a lot more. The ones at the bottom tend to be a lot safer. And again, across the top here, large, well-established companies tend to be a lot safer. Get into some of these small growth stocks, you've never heard of them, it could go up and down 20, 30% in a day. It is much more risky. So from a standpoint of overall risk, you want to make sure that you understand that metric.
And I guess you need to know how much risk you want to take before you get into it.
Right.
All right, James, thank you very much. Love the props. Excellent job there. If you need financial advice in Lee County, go to the Waterstone Financial office in Fort Myers. Address is right there on your screen, or you can give them a call, and their website is waterstonefs.com.